one of the things that I've seen happen way too many times that ultimately killed a deal for somebody is when they change jobs. And I've got a quick story I can share. I'll call them the Smith family, but this really, great couple out of the Bay Area. Like a lot of people, they're, living the Bay Area life. They had really great tech jobs, and they wanted to basically, expand into Sacramento and get more for their money. And so they came out here, they found a new construction that they liked. They signed an agreement with the builder. They had to get pre-approved with that builder's lender. And then what happened is they ended up going with that builder's lender and to get the incentive, of course, right? And it takes 5, 6, 7 months usually to close one of those transactions. And what happens a lot of times is the builder's lender, they check out. I mean, they're not going to check back in with you until it's time to basically get your transaction closed. And in this scenario, Mrs. Smith, both Mr. and Mrs. Smith, they were approved to work remote basically. And Mrs. Smith's employer, one of the big tech companies that basically pivoted and kind of said, you know what, we're not actually going to allow you to do remote. Maybe we're hybrid or whatever the case. But ultimately, she decided, you know what, there's other tech companies in the region in Sacramento. There's a lot out here, guys. And she got a job with one of the tech companies doing basically kind of the same thing that she was doing. She was in sales. But there was one major difference is that she, with her previous company, was a W-2 employee. And with this new company doing the same exact basic thing, different company, of course, she was a contractor, a 1099 contractor. And a lot of people, when they make that switch, they don't realize that they just became self-employed. And in order to get financing, at a bare minimum, you have to have 1 year of being self-employed and a year of filed tax returns of being self-employed. So what happened? All this time goes on, and the builder's lender reaches out to the Smiths about 45 days before they're supposed to close. And he's like, hey, I need you to send me your updated pay stubs and this, that, and the other. And so they send in all their stuff. The builder calls them back and they're like, hey, what's up with this? Did you switch jobs? Like, what's the story here? Well, after, they gave the builder all the details, it turns out that they can't even use Mrs. Smith's income anymore and that they don't qualify for the deal. The reason that I know all the details, by the way, is that I talked to them like when they first got going. And then, they, of course, like I said, they went with the builder's lender to get the incentive. And I didn't talk to them until basically the builder 5 months later or whatever is like, hey, you don't qualify. They called me freaked out, basically like, hey, how do we fix this? And unfortunately, in their scenario, they lost the house and their deposit, guys. They had $30,000, I believe it was 25 or 30 grand in like an earnest money. And then they were using one of the builders that does the whole design studio with the upgrades. And so they made their upgrades and they had like another 30-ish $1,000 in upgrade deposits. They lost all that money. It was like $60,000 that they lost. And they didn't get the house, obviously. And they ended up going back to the Bay Area. It was just a complete nightmare for them. The reason that they couldn't qualify anymore is that in order for their scenario to work, they needed both Mr. and Mrs. Smith's incomes. But Mrs. Smith all of a sudden doesn't have income that can be used to document for the loan because she's now self-employed. So literally their debt ratio went to like 90 something percent. And so, the moral of the story is, when you get pre-approved for something, don't change anything about your scenario. Don't change your job. Don't change your credit. Don't go take out new debt. Don't start not paying your bills on time. I mean, if time goes on between when you get pre-approved to when you actually need to get the loan done, and I say time goes on like a couple of months, the lender's going to have to update everything, your credit report, your documents. And if something changed and now all of a sudden you don't qualify, you're going to be in a tough position, especially if you're working in the new home construction sector. And those guys are gangsters with keeping earnest money deposits. Like they'll keep your money and sell the house to the next person. So you got to make sure that you're not messing up your own loan.